All right, so we're now recording. Sadly, you're not going to be able to look at me the entire time because I'm going to pull up a PowerPoint. Here's where it gets tricky. There it is. Okay. Animation. No. How do I make this menu go away? There we go. Not so difficult. So I just wanted to start by telling you a little bit about myself. And by the way, I'm going to, hold on. Why does this webcam thing come up? I wish I didn't hit start recording yet because I'm a disaster so far. So if for any reason you can't hear me or you're having some trouble, just send a chat message because I think that'll pop up even when I'm in the screen sharing. Otherwise, I'm going to take questions at the end. Like I did post in a couple other groups. I do have to wrap it up by about 8:40. My dog is sick, so I have to run home. But I want to take as many questions as I can. And if we do run out of time for any reason, you can always message me or I'll talk to Dana and see if maybe we can do like a Q&A session one day. So a little bit about me. I'm a CPA. I'm licensed in Pennsylvania. I also have my master's in accounting and financial management, which I finished a few years ago. I started working for a public firm right out of college and, hold on, sorry, I think we have a chat. I just want to double check it. Oh, thank you. I am recording. Like I said, I apologize to the people who are going to have to hear this recording, but it is recording, so just so everybody knows. So I started working in public accounting right out of college. I ended up working for one of the top 25 firms in the country, which was great because I got experience like you wouldn't believe from, people like me now who make a normal salary to people who are high net worth individuals who are worth actually billions. And it was a fun experience, but like I said, I got to learn a lot about small business and taxes in general. So like I said, I'm from Pennsylvania. I live in Hatfield, which is about a half an hour, 45 minutes north of Philadelphia, with my fiance and my sick dog. So I have been at my current place of employment for about 5 years. The tax partner here had worked with me at my previous job. So he left, started his own company, and I came with him. I've also been a pure romance consultant for a little over a year. I signed up under Jen Marshall. I'm really just a hobby consultant. So, you guys all, I guarantee, know the pure romance business better than I will ever know it. But what I do know is the taxes for it and how to account for it and stuff like that. And that's a big part of the reason why I stay a consultant is because I'm probably going to know a little bit more, or I'm going to have a little bit more in resources than, your typical accountant. And this helps me when I'm trying to get business with pure romance consultants because I do know the business. So I had mentioned earlier that I do have clients across the country. Primarily the clients that are far away from me are pure romance related. I don't meet face-to-face with a lot of my clients. I would love to, but it's not a necessity. A lot of it's telephone calls, emails, fax, text, Skype, Facebook Messenger is a big one because then I can just shoot you a message and you answer it when you get it. So I try to keep it very convenient. My biggest thing is, I'll do what works for you. Like I'll work a Sunday if I have to get something done for somebody, or, Monday at 4 a.m. if I need to do something, I'll do it. So I just try to make it convenient for the clients. So I'm going to give you a very quick spiel on, because like I said, I'm also trying to sell my business and get more clients. So I'm going to make this very quick though. So it's, because I know that's not why everybody's here. If you are looking for an accountant, some reasons that, I would love to work with you. I have a lot of experience with direct sales now, not just with Pure Romance. So like I said, I understand the business. It just said I'll work around your schedule. I keep a very quick turnaround. So if you give me your stuff and it's, you gave me everything that I need, you're going to have a completed tax return pretty quickly. I always say 1 week. That's a little bit on the long side for me. Now, if you give it to me April 1st, well, obviously I wouldn't only have a week or two to get it done, but the longer we wait, the longer it could take. But I would say it's been about a 2-day turnaround so far. I also maintain a private Facebook group for my Pure Romance tax clients where I share a spreadsheet, I share some tips, people can ask questions. It's been very helpful to contact everybody all at once. And I'm going to come back to my spreadsheet. I don't charge if you call me or email me, it's a flat fee. If you're calling me every single day, we're going to have to talk about it, but you'll never get a hidden fee or be surprised by anything. The biggest thing that I think is me and my firm's selling point is we're always thinking outside the box. If I see something that just, I don't know, I can't describe it. It's just after years of experience, something that doesn't make sense or just something comes to mind, I'm going to look into it for you, see if we can find some benefit for you. A lot of stuff that I do involves tax planning, which means, let's say you're really kicking ass and you're netting $80,000 a year, after expenses. I'm going to say, hey, listen, we can get a great tax benefit if we incorporate you, or we can set you up a retirement plan that's tax deductible. And, just it's a lot more than just filing a tax return for you. Like I said earlier, you guys know Pure Romance. That should be your focus. You shouldn't really have to know numbers and know how to do a tax return, because this is what, professionals and, other people in my field studied and went to school for and all that. So, not going to get into all this stuff about my firm, but I just told you everything that was important. So, an overview on direct sales taxes. So you're considered an independent contractor. And I think I have a slide coming up about this later, but I'm going to talk about it now. So what's the difference between an employee and an independent contractor? I could go on for an hour about it, but an employee, has a set schedule. They go to a place of business and work. It could be working from home, but it's typically that you have a set schedule and you're using materials that are provided for you by the employer. An independent contractor is more like you're your own boss. You make your own hours. You bring your own materials to your job. Like I said, there's so much that can go into that, but it's important to know, obviously, you guys are independent contractors. What that means is instead of at the end of the year getting a W-2, you're going to get a 1099. Now, let's say I was an independent contractor and I did consulting work. I'm going to get a 1099 at the end of the year, and it's going to tell me that a company paid me $5,000 for services through the year. Then when I file my tax return, I know, let's say I wasn't tracking anything. I know I made $5,000 from ABC company. The difference with direct sales that I think is confusing a lot of people, the 1099 is not going to have an amount on it. It's going to have a checkbox that says there was more than $5,000 in purchases at wholesale. So I've been seeing a lot of people comment, I didn't get a 1099, or, how do I file my taxes with no number? You're not relying on that. That is strictly so that Pure Romance can report to the IRS that you purchased this much from their company. You'll also get another 1099, which will have an amount on it. And this is for gifts, trips, prizes, awards, overrides. And it's anything over $600. You're going to get a 1099 for that. But again, I'm going to touch on this a few times. Pure Romance, because you're an independent contractor, you're not an employee, it's not the job of Pure Romance to track your income or your expenses. This is like any other business. If I went out and started a bagel shop, I wouldn't have somebody telling me, well, here's how much you made, here's how you file your taxes. So I just want everybody to keep that in mind. There's no responsibility on Pure Romance's part to tell you how much you made for the year. The other thing that I see a lot that scares me is that you don't have to report your income if you didn't get a 1099, which is so far from the truth. If you receive income for anything, you need to be reporting it. And to be honest, it's not worth the risk of not doing it. Now, let's say you got paid in cash for every single thing. Is the IRS going to catch you? Probably not. But that's typically not the case. People aren't paying in cash anymore. So if you're getting paid for something, report it. It's not just the legal way to do it. You can also report deductions against income. So you might actually get a tax benefit by reporting money that you made. If you're in your first or second year of Pure Romance, guaranteed you're going to have a tax loss, which is going to help you in your tax return. So it's actually not a bad thing to report your income. So not only is it legal, it's helpful. And I'm also going to keep saying this. We're going to be focusing on cash in and cash out. And what I mean by that is there's some spreadsheets I know that are in Dana's group. I think there might be one in the GEMS group, but I don't know if they're considered or if they're called tax worksheets or not. The only and there's nothing wrong with them. The spreadsheets are amazing. They track everything for you. They also track a little bit more than you would actually need for your tax return. So what I did is my spreadsheet that I created for my clients is very, very simplified because I had trouble figuring out a couple of them. I just got overwhelmed with it. But I created one that just strictly focuses on payments in, payments out. So what do I mean when I say this? I'm going to go back a slide because I'm not quite there yet. If you were to print out from Q what your retail total was for the year, let's say it's $20,000. Does that mean you collected $20,000 in the year? Definitely not. It's going to be very rare that it would actually be the same because, first of all, you give discounts, you have hostess gifts, you have hostess credits, you buy certain things for demo, you buy things that are for personal use. So I don't really care what Q says. Now, if, in certain cases, I've had to rely on that to do somebody's tax return, but what I care about is how much did you put into your bank account? How much did you spend out of your bank account? So if you went to a party and you did $600 in sales, you collected $600, that's your income. If you had to go and purchase product for that party and you spent $300 is your expense. It's your product expense. When I say $300, I'm also assuming that includes your shipping and your taxes and stuff. I consider that as one number. So if my total invoice to Pure Romance, I don't care if it's for personal, well, ignore the personal part. I don't care if it's for demo to keep in your inventory, if it's for a client, it's a product purchase. So if you spend $300 to Pure Romance, you're going to deduct that. So I think everybody's life will be a little bit easier if you strictly focus on money in, money out. Ignore the hostess gifts, ignore the discounts, because it just makes it so confusing. I tried to do my own taxes one year that way. I just sort of did like a sample and I couldn't figure it out. It was just, and I do hardly any sales. I stay active. But if I print a report from Q and it says I did 1,000 in retail for the year, I know I didn't collect $1,000 because, there's giveaways and whatever. So like I said, cash, it's all about, and when I say cash, I mean credit card payments, checks, whatever. Focus on what went in and what went out. So I'm going to come back to that in a little bit, but I just want to start stressing that. So what's considered income for a direct sales consultant? Income would be the sales that you collect from outside orders, parties, whatever it might be. Commissions, if you have a team, so I guess that's overrides. I don't have a team, so I apologize if my wording is incorrect. Any bonuses you could get, free product, any gifts from Pure Romance or technically from a leader. Now, if I got a necklace from my team leader, would I include that as income? Probably not. I'm just telling you technically what the IRS says. Again, I focus on cash. So what came into my bank account? The only thing that's not cash that does need to be reported is free product, because you're getting something that you can turn around and sell. So it is important to report that as income. So some examples of expenses. Again, I just said product, which I don't care what you use it for. And when I say product, I also include sales tax and the shipping cost to Pure Romance. Donations are another story. So if you round up your order and donate to the foundation, you're going to want to show that separately. But other than that, I lump product together. If you go to training, whatever your cost is to get there, while you're there, anything related to going to a training event. So if you have to buy an airline ticket, if you're paying for your hotel stay, if you buy any meals while you're there, anything related to that, because you're on a business trip. Keep in mind, pretend, and it's not even pretending because it's true, but I think some people, when they think of direct sales, might not think of it as the same kind of business, like I said, as a bagel shop. Think of yourself as a business person. You own a business, and if you travel for business, those expenses are deductible. Postage, shipping supplies, anything to send stuff out to a client. So keep track of that. Office supplies. If you're buying printer ink for printing, I don't know, whatever you print. Games. I was printing like stuff for games. Little inserts to give to hostesses or guests. Pens for the parties. Clipboards. Again, if you're at Staples and you're buying stuff for your business, that's deductible. Write it off. Mileage. So automobile expenses are a little bit different. You can deduct your actual expenses, or you can deduct the mileage at the rate for the year. 2014, the rate was 57.5 cents, which was wonderful. It's a really high rate. For 2016, it has dropped to 54 cents, which is still pretty good. What that means is for every business mile that you drive, you get to deduct 54 cents from your tax return. Now, if you choose, And I can tell you, I think I have one client this year that I know of. You can deduct actual expenses, which would be like gasoline, taking your car for an oil change, stuff like that. You don't want to track that. And to be honest, it's almost never going to be more than the mileage while the mileage is at this rate. 54 cents per mile is amazing. That's a pretty high number. So you're not spending that much on gas, I can tell you right now. So what I do, if I drive to a party, if I drive to the post office, if I, what else? Do customer drop-offs, if I, whatever, anything business related that you're driving for. If you're driving to the hotel where you're staying for a training, then you want to track that. One good way to do it is, some people keep a log in their car. What I do for my business here is if I drive to a client, I go on Google Maps, I print out the directions basically, and it shows the mileage. There's my proof. And you can keep that just like a receipt. You can write the date on it, drove to this person, whatever. Now, I said you can only deduct actual or mileage. There's other expenses that are not part of that. So you would get to deduct both. So if I use the mileage method, I can also deduct tolls, parking fees, there's a few others. So you still get to deduct stuff like that even when you take the mileage method. Cost of advertising. If you do a Facebook boost, I consider vendor events advertising. If you do one of those, if you buy the decals for your car, that's advertising. Cell phone and internet. So, and I'm going to write myself another note because I just thought of something else. Cell phone and internet, what we do and what sort of industry practice is, obviously you're using your phone for business, but you're also using it personally. We assume 60% of it is business use. It's a little bit high, but it's not a red flag. So you'll see that I'll push the envelope on certain things that I know are not red flags for the IRS. Other things I'm going to be straight up with you that you don't want to push it. Cell phone and internet, not really a huge issue if you stick to 60%. On that issue, or on that note, people also ask about home office deductions. I always say hold off. If I see that you're reporting a huge profit, I might say, hey, listen, why don't we take a look and see what the benefit is? To be honest, it's never really a huge number. It's not going to help you out a ton. But that is another expense that, we can take if needed. If you're already reporting a loss, there's no benefit, so I wouldn't do it. I'm sorry, I'm just reading the chat because I just saw it pop up. Okay, and I'll come back to this. So, question was asked if you need to be an LLC or if you need to incorporate. That's something that it's sort of cross that bridge when you get there. It's not something you need to do until you hit, in my opinion, a certain number. Every accountant could have a slightly different idea of what that number is. But if you're reporting a lot of net income, it's better for you to incorporate, because then what we do is we put you on a salary. You're paying yourself through payroll. You're getting the deduction, and you're paying a little bit less in payroll taxes. So it's something to talk to your individual accountant about. I can't really advise you on it, only because I don't know everybody's situation and I don't want to give any give any wrong information and anything that's misleading. But I will say it's not something you typically worry about until you're a few years into the business and doing sales of probably well over $100,000. I'll say that. And I just thought of another thing while I was talking about that. Now I forget it. It'll come back to me. Something with expenses. Don't remember. Okay, inventory. This seems like a really scary thing. And I think a lot of people, when they hear it, sort of freak out a little bit. I'll tell you my opinion. And again, this is me as an accountant and my firm's stance on inventory. I'm not speaking for accountants across the world. I do not track inventory for tax purposes. Are you supposed to? Yes, technically. I take the stance that you sold everything that you bought for the year, or you used it, or whatever. You're not holding anything. The reason I do that is inventory can get a little bit funky, a little bit confusing. Now, again, if you get to a point where you're over $100,000, $150,000, we'll probably start showing inventory on the tax return. But for the time being, first couple of years, I don't show it. And I see your questions coming in, so I'm just going to make a quick note of them, and then I will touch on them as soon as I wrap up this thought, because I will get sidetracked. So the thing with inventory, if you want to know the sort of boring way that it works, is on your tax return, what would happen is you report how much you had at the beginning of the year. So let's say I started 1/1/16. I have zero inventory at the beginning of the year because I bought my kit later. What you would then do is add in your purchases. So let's say I bought $450 worth of product. Then let's say I sold $250. So what's left? $200. That would be my ending inventory. That's what I would report on my tax return. Now, where it gets a little confusing is because, are we talking retail or are we talking cost? If we can stay consistent that we're really talking cost, it wouldn't be a huge issue. But here's the thing with inventory. So you have $200 at the end of the year. You get to deduct $250 because that's your cost of goods sold. So the amount that you actually sold was $250. That's what you get to deduct. This is on the technical basis. This is not how I report it, and I'll tell you why. So you have $200 left over. You're not deducting that $200 in inventory because it wasn't sold. The next year, you're starting with $200 of inventory. Let's say you sell it all. Excuse me. And you don't buy any product. You sell off your inventory. You're now deducting that $200. I need a drink. My throat's so dry. So you're deducting it in the next year. So what is inventory? It's a timing difference. Am I deducting it now or am I deducting it later? When you're talking, a couple $1,000s, it's not worth getting all crazy and tracking it. That's our opinion again. But as you can see, if you're not deducting it this year, you're going to deduct it next year because you're not going to be sitting on inventory for, 5 years. You're eventually going to sell it or you're going to do something with it. So that's why you'll see that I don't ever ask you what your inventory number is. If you decide to track it, I will take it and I will report it, but I don't require it. And again, I'm coming back to retailer cost. Everything needs to be at cost. What did you pay? What did you receive? Okay. So if you were tracking inventory, I want to know what it cost you. Again, it's just gonna be confusing because then if you want to look on Q and find out how much it was, you'd have to take the retail minus your discount, and it's a nightmare. So I wouldn't worry about that if you're relatively new. So we did talk about what an employee is versus an independent contractor. Self-employment tax was what I wanted to discuss. So going off of that, what's the difference between an employee and an independent contractor? Aside from what I went over earlier, the biggest thing is if you're an employee, you're having taxes withheld from your paycheck. If you're an independent contractor, you're not, but you're getting a larger amount. So instead of, I'm not going to pay you at the party and say, okay, here's $100, but I'm going to withhold 10 of it, give it to the government, and there's your withholding. You're getting the gross amount. You're getting a higher amount. What happens then is when you go to file your tax return, you're going to have to pay a few different taxes on that money. So let's say your net income was like $5,000. You might be a little bit mind blown when you first see how much tax you owe on that. It's going to be a very high percentage, and there's a reason for that. You need to pay Social Security tax, Medicare tax, federal tax, state tax, possibly local tax if you're in Pennsylvania. It's a lot of taxes. Again, as an employee, let's say I make $1,000 gross. My company is withholding 6.2% to Social Security, 1.5% to Medicare, about 15% to the IRS, 3% to PA, and 1% to my local. I'm paying about 25, I don't even know what those numbers were that I just said, let's say 25% that I'm not getting out of my paycheck. Where you guys would be different is you're getting all that money up front, but then you have to pay that 25% later on down the road when you file your tax return. So you're not really, getting hurt. It's just that it's up to you to set money aside for your taxes. I hope that makes sense. It gets a little bit confusing, but like I said, it's really just that I've been, as an employee, paying in that money all year long, whereas an independent contractor is not. So self-employment tax, it's very high, but you're not paying any more than anybody else. It's just that you have to pay it all at once. And when taxes are withheld from your paycheck, it's not like the company paid it for you. You were paying it all along. And it's funny, I'm going to make a comment about this. Every year I get at least one person, and it's typically my brother-in-law every single year, who says, I'll do his tax return, and he'll say, how can I get a bigger refund? And it cracks me up because the true, honest answer is pay more into the IRS. If you want a bigger refund, start writing checks to the IRS, and then they'll give it back to you in April. The money you're getting back was your money. You gave the IRS an interest-free loan for a year, and they're just returning it to you. Now, this could be different if you get an earned income credit or if you get child tax credits. But if you don't get either one of those things, you're getting your own money back. So if you see, excuse me, that you get a smaller refund, or you're not getting back as much as your friend who just got their taxes done, that means nothing. Don't compare it, because it's your own money that was taken out of your pocket. My fiance has the perfect amount withheld that he never gets a refund. I get a refund every year just because I like the interest-free savings account. It's the same amount of interest that I'd be earning anyways at my bank, getting a $2,500 refund, and it's untouchable money. So, but it's my money. I paid that into the IRS. So I just want to make sure everybody thinks about that. If somebody gets a $10,000 refund and you get $1,000, I can't do anything to help you get more back unless you write a check to the IRS. It sounds silly, but that's the way to look at it. And I think a lot of people don't understand that. So, gosh, I am dragging on. Quarterly estimates. if you are at the point where you're making money, you technically need to be paying the IRS on a quarterly basis. So if you think you're going to have a year where you made a lot of money, you should be paying the IRS, and your accountant would set up quarterly estimates for you. It's just something to be aware of. Hobby loss. This is another one that you really want to focus on. So this can get a little bit confusing, but here's the deal. If you have a business, you're in it for a profit. Nobody enters a business hoping to get a loss. With that said, you need to report a profit every once in a while to the IRS. Now, your first couple of years in business, like I said earlier, one of the joys of that is you get to deduct a loss. And this helps you on your tax return. But you can't do that every year. And otherwise, everybody would go out and buy a business and lose a little bit of money so that they could show a loss on their tax return, which, to be honest, as a tax accountant, drives me nuts because that makes no sense anyway. But you're in this business to make a profit, and you have to prove that to the IRS. So in the past 5 years, you can't have more than 3 years of losses. And I have to find the proper verbiage on that because it sounds a little bit confusing, but basically you just can't keep reporting losses. What happens is it gets flagged as a hobby loss, and this will get flagged. You will not get away with this one. If you do, you're very lucky. And what that means is you're not allowed to deduct any expenses. So they're saying, like, okay, let's say I like to knit, and I'm not making any money, and for like 3 years into it, I'm just, going out and buying yarn every day and deducting it on my tax return, but I'm not selling it. The IRS is going to say, hey, listen, that's not a business, that's a hobby. Like, you just like knitting, girlfriend. Like, you can't deduct a loss against that. That's crazy. So all those expenses get lost, and then if I do make a sale, I have to report that income as just regular old income with no expenses against it. So you don't want that to happen. You want to have a good accountant, though, that can do some tax planning for you so that, we do bring your net income down as much as possible. But if you are in this business and don't want to report income on your tax return, you need to get out within 2 years because it's a business. You have to report a profit. There's no ifs, ands, or buts. And this is one thing I will not let fly with my clients. I'll push the envelope a little bit, but I will not do anything with a hobby loss because it's just not fair either, to be honest. So that's all I'm going to say about that. Hold off on the questions because there was 2 quick things I wanted to talk about. In the beginning, I'm going to stop sharing this so you guys can see my face again. Somebody had mentioned what issues, if any, with married and filing with your husband. Sorry, I'm reading the notes. I don't even think that I said this in the beginning, but you don't file a separate tax return for Pure Romance. You file a Schedule C, which that is where you report all of your income and all of your expenses. What happens is you'll see, like, you'll report your income, report all the expenses, you come down to a net income number. That number, they'll tell you then, needs to go to the 1040. I forget what line it is, but it's one of the lines on the 1040. So it's basically just flowing through to your own individual tax return. And it's line 12 on the 1040. Okay. Maybe 1 second. Okay, so you're not actually filing anything extra. You're not a corporation. You're not whatever. Do Do I have everyone muted, or is that me that I sound, or I hear that sound? It's too late. I can't talk anymore. So no extra forms, file the Schedule C, goes right through to your 1040. So what does this mean if you're married? Nothing. You have the option always to do married filing separate. I think maybe 1 to 2% of my clients get a benefit from filing separately. You typically don't. You lose deductions. The IRS sort of punishes you for filing separately. Some husbands have had concerns where, it's like, oh, my wife started this business and I didn't know it was going to affect our taxes. Well, it's not going to really, kill you. It's probably going to help you at first. And if she starts bringing home the bacon, yeah, you're going to pay a little tax on it, but you're making a lot of money. So it's a good thing. So in my opinion, no effect if you're married. One of the other questions was if you should have a separate checking account. I did, and again, I was doing it as a hobby, so I will not be reporting a loss next year. It just made it a little bit easier. It's not required unless you incorporate, but you can commingle funds at this point because it's all flowing through to it's all linked to you personally. So you can use your regular account if you want to. It's not an issue. I don't have a mileage log that I use. My Excel spreadsheet that I use for my clients, it's just part of like where the expenses go, where you can enter your mileage and it automatically deducts 54 cents per mile. So TurboTax Business. I'll give you a quick little, did I skip something? I go to the store. For each party, going to the store to purchase items. Yes, all of that stuff. Anything that's business, if you're driving, deduct it. Yes, there are some apps out there that I've heard that are really, really good with mileage. So definitely ask, other consultants what they use. I see here it says Mile IQ. It's better than keeping like a book in your car or whatever. That's what the IRS used to want. So TurboTax Business. I have one rant that I will make. The rant is I don't like H&R Block or Jackson Hewitt. And it's no offense to them. My experience has been just terrible. What I mean when I say my experience is when I get a new client, the first thing I do is I ask them for their prior year return. And there's a few reasons. It helps me to get you set up in our system. I don't have to ask you like a million questions like what's your third kid's social security number, what's your address, what's your phone number, what's your whatever. The second thing is I basically recreate your return for free. And if there was a mistake, I will amend it for you for a fee. So if, you're going to get a $500 refund and my fee is only $175, it's worth it to amend. With that said, I've amended every single tax return that has come from H&R Block. I kid you not. I don't know if it's just the specific places that people go, and I truly mean no offense if anybody works there. It's just been my experience. However, TurboTax Business is not terrible. If I was going to pick one to use that's not a CPA, it would be TurboTax Business. The only thing that I don't like about it is you don't have a human that you can bounce questions off of, or, if you're confused about something, call them up and whatever. So you're missing that human experience with TurboTax Business. But if you know what you're doing, if you're kind of familiar with filing taxes, go for it. That's the only thing I don't like about it. And if you do use TurboTax Business, I recommend getting that audit feature. I think somebody told me it was like $40 or something. They'll cover your ass if something happens. So that's a great feature. I typically wouldn't recommend, anybody but myself, of course, but I also don't want to, some people's stuff is really simple. My fee is typically 175 and up. It's normally around 175, but I don't want to, it depends on how many forms you have. So that's sort of like a baseline I'm going to give you. Other people, it's a little bit more. But I don't want to gouge anybody. If I think you can do your tax return by yourself, I'm going to tell you, just go use TurboTax. Don't pay me for it. It's silly because we're still sister consultants. I'm a business person, but I also don't want to hurt anybody in their business. I would like our businesses to grow together. So if you are my client, that's great. I'm not going to rip you off. So, question, how do we hire you as our accountant? What do you charge? How can I get put into your Facebook group? So we can have a private chat if you would like to move forward with me. Again, our minimum fee is $175. If you're in Pennsylvania and you don't have a ton of other crap, that's probably what the fee is going to be. If you're in another state, I have to pay for an e-filing charge to file in that state. So it's going to be a little bit more, but to be honest, I think the most I've charged a pure romance consultant was $300, and that was because I had to file in multiple states, multiple W-2s. It's mostly with the state stuff because state forms can get a little bit expensive, but $300. I mean, I don't know what H&R Block and Jackson Hewitt are charging, but I think they're a little bit more than what my fee is, and I don't think that they're CPAs there. So I think you'll have a better experience with me. And then once you become a client, I put you right into the Facebook group if you're okay with it. Some people, want to keep their tax stuff completely private. Don't want to say that you're working with me for, some people just really want to keep that stuff private. I totally respect that, and I will not put you in the group. Somebody asked, I still use my guy in Arizona for a sole proprietor. Would you file like that? I think you're asking if he files as a sole proprietor. Yes, that means you're a Schedule C. So if you're a sole proprietor, you're filing Schedule C. Items that we've given friends and family or even ourselves, can they be used as advertising, product testing? That's a really good question. I never thought about that. That's an excellent idea. Now, here's the only thing though. You're already deducting it as a product expense because you're going to deduct it when you purchased it. Now, if you want to do a little extra work and take it out of product expense and move it to advertising, you can. But I say it's deductible no matter what, regardless of the category. But I like that thought. That's thinking outside the box. But it's definitely deductible. It's just what category you put it into. Home office. Schedule C I talked about. I think I sort of touched on most of the major points that I wanted to talk about. If anybody has any questions, you can type them up. I see I have some Facebook message requests. I probably won't get to anything tonight only because my dog is sick. So I'm going to go home and deal with that. And then when I get back into the office tomorrow evening, I will respond to everybody. One more question. What if I started over a week ago and have not started tracking anything yet? No mileage, nothing. Okay, so that's not that bad, to be honest. Good for you for starting to think about it now, because I have a lot of people, it's now February, who started in last January and haven't started tracking their stuff. So they're over a year behind. So you're in really good shape. So we can talk about that. If you want to add me on Facebook, it's Jenna Sheridan. I posted in Dana's group, Jen's group, Mallory's group. I do check my other folder, so you might go into spam at first, but I'll eventually see you. My email address is j.sheridan, SHERIDAN, at JEB, B as in boy, RAN as in Nancy, CPAS.com. So it's j.sheridan at GibronCPAs.com. So you can also shoot me an email. And like I said, I'm out on Thursdays during the day, but I come back at night. I'm going to post the recording in Dana's group, Jen's group, Mallory's group, any group. Whoever wants it can have it. Email me if you need it. I'm going to finish with this last question from Leah. As a new business owner, what are the main things we should be focusing on tracking so we're prepared for our taxes next year? Is there a Business for Dummies book or something? So this is your Business for Dummies book. If you buy something that's related to your business, if you do something related to your business, write it down, keep a receipt. That's literally the best advice I can give you. Focus on cash going out of your pocket and cash coming into your pocket, okay? As far as main categories go, I can tell you what I focus on is, and I'm going to read them off. This comes directly from the Schedule C. So if you want to pull up a Schedule C form and look at it, you can see what the main categories are. Now, you're not going to see cell phone and internet on there, but you can still deduct them. Advertising, insurance, legal and professional fees. So if you pay an accountant or a lawyer, office expense, repairs and maintenance, supplies, licenses, travel, meals and entertainment. Those are the main expenses from the Schedule C, okay? But like I said, other things are deductible. So don't think that if you don't see it on there, it's not deductible. If it has to do with your business, it's deductible. The only thing that I don't like to do is deduct uniforms. The reason being is to deduct clothing, it technically needs to be an item that you could not wear anywhere else. Even nurses, I mean, technically, if you were to ask the IRS, you can't deduct scrubs because you could wear them out, and people do. I would. They're so comfy. It needs, and like even military stuff can be considered like, oh, you can wear that to the naval ball or the military ball. I'm sorry if I just said that wrong. The IRS will come up with any excuse. So I don't like to push that. I will do it occasionally. It depends. Let's see where you are. I'm one of those people, I'll see, hey, where's your income right now? Let's not push it. Okay. Okay, so I'm going to wrap it up. Thank you guys so much for joining. I hope you got some good information from this. I know I jump around a lot, but there's so much going on up here that, you know, I want to cover as much as I can in an hour. But like I said, send me a Facebook request, a friend request, a message, whatever it might be. Shoot me an email, and I will get back to you by, I'd say by Friday at the latest, if tomorrow night gets busy. So thank you all for being here, and have a great night. Bye, guys.